Well, hey there, welcome to the channel. My name's Jeff. If you've been here before, fantastic, grab a seat and stay a while. And if you haven't been here before, grab a seat and stay a while, because today we're going to talk about Axcelis Technologies. Now, this company just released its first quarter 2025 results, and it showed that it had revenue of $192.6 million. The reason this is interesting is last year at this time, the earnings were $252 million. So the company has seen a decline of 23.7% in their year-over-year earnings. And this has freaked out investors to some extent because the stock price has been going down since last year. But I think what's going on, if we just take a look at the last month, is that investors are not as scared about the prospects for Axcelis as they are about some companies, because Axcelis Technologies has seen in the past 1 month its share price go up 27.4%. And by the way, this video is coming to you from beautiful Beverly, Massachusetts, and Beverly is the hometown of the headquarters of Axcelis Technologies. And as longtime viewers will remember, a year ago, I came to this town and actually went to headquarters and met with one of the executives at Axcelis Technologies. It was how I learned a lot about this business, and understanding the business and respecting the CEO and the people in the executive team has helped me to hold on to my shares of Axcelis, not sell them, despite the fact that there's a lot of fear and uncertainty in the markets right now, which have driven down the prices not only of Axcelis, but of a lot of other companies in the semiconductor world. So what I want to do today is just kind of look at what's going on and sort of ask, is this a problem? And whatever we're seeing with Axcelis. And I will tell you the short story. And first off, this is not financial advice. These are my opinions. So always do your own reading and learning and research. Don't base it on anything you see here on YouTube, but keep this as maybe a data point and a part of your learning. So what I find is that even though the earnings for Axcelis Technologies look like they're a lot lower, about $1 a share now compared to about $1.60 last year, it doesn't give me a lot of fear, because a lot of companies have seen decreases in their sales, and to be surprised by that or to sell the stock because the earnings are lower, to me shows a kind of ignoring the vicissitudes of business and of life. And I think we just have to realize when you buy a stock, you're not just buying this little thing that, you know, goes up and down all day on your phone or on your computer screen. You're buying a part of a business. If the business does well over time, you'll probably do pretty well. But if the business fails over time, you're not going to do so well. I don't see Axcelis as a failing business. I see it as one that makes ion implantation equipment to a very specific part of the semiconductor manufacturing chain. And because sales of semiconductors have a lot of uncertainty this year, and because the tariff situation has a lot of people wondering what's going on and what are sales going to look like in almost any industry in the United States, I think it's just natural for Axcelis to also be in the same boat. So Axcelis, they announced their financial results for the first quarter 2025 on May 6, 2025. The revenues were $192.6 million. Like I said, that's down from $252 million. The president, CEO, his name's Russell Lowe, he said, "We executed well in the first quarter, delivering strong profitability despite a moderation in customer investments and a more uncertain, broader economic backdrop." So that's just what I was talking about. Axcelis is well positioned to navigate a dynamic macroeconomic and global trade environment with an agile global manufacturing and supply chain footprint that we have optimized over the past few years. This provides a solid platform for us to meet our customers' needs while continuing to invest in innovation to capture the long-term growth opportunities that lie ahead. So I think that this is just a situation where, you know, we're going to have to sit tight. I own my shares. I've had them since, I believe, the beginning of last year, the very first week of 2024, I bought my shares. And yeah, it's been a rocky road. But look, I invested in a small cap company, actually invested in 10 small cap companies, started 2024, and they're all in the semiconductor sector. And my view was like, listen, I don't expect to hit on all of these, but if 2 or 3 of them can wind up being successful, profitable companies and their stocks double or triple or do better than that in the next 5 years, 10 years, I'm going to be very happy. So far, it's a little early to judge, but I do have at least one of these stocks, I haven't checked really recently, but that have actually seen their share prices go up above where I bought them at. But being honest about this whole portfolio, I think the decline in the share price of the combined holdings has been about negative 33%. So this is a real clear example, being very transparent, honest with you guys, of the problems of investing in small cap companies, because this portfolio does not own large cap semis like NVIDIA or ASML or Applied Materials, any of the huge companies. It's just the small caps. So not only is it small companies, but it's small companies in the semiconductor sector of, you know, that particular industry, which is very specific. So it tends to be cyclical. And there are years when demand is strong and these stock prices go crazy. And there are years like this one where there's not much demand and prices tend to go down and nobody wants to own them. So I think that to let your own emotions be dictated by the ups and downs of a cyclical stock sector is kind of crazy. Like, why would you want to go up and down just because your stock price is? But I think that's what's happening with Axcelis. And just to give you guys, because I think some of you are really into stocks, you know, you're wondering what's going on. 10 semiconductor stocks. I sold off positions in some of them, but I have kept about 5 of them. I've kept my positions, I know, in Axcelis Technologies. I've held my position in Camtech. I still own Nova Limited. I still own shares of Onto Innovation. I think I mentioned that, but if I didn't, Onto. From that portfolio, I own Aspen Aerogels, even though it's not a semi-stock, but I bought it at the same time. And I sold a few of them, not because they were bad companies. I needed to raise some cash, so I sold companies like Photronics, On Semiconductor, but I held some others because, you know, just because the stocks go down doesn't mean the company's bad, you know? It's like every person can have a bad day and every business can have a bad year, but it doesn't mean you throw it out. So my time horizon is about 3 to 5 years minimum. And if the stories are good, if the companies continue to be profitable, I have no problem holding these stocks forever, really. But I do have a longer time horizon than most. And I think that a lot of traders especially would dump stocks as soon as the story seems to change, even if it's just like very short term. You know, some people have like a time frame of, you know, 15 minutes or 10 minutes, or they're trading within the day. But I'm trading over a period of many years. It keeps things simple for me because I don't feel like I always have to be doing something. And just zooming back a little bit of zoom back, I think that the important thing to do when we invest, and this is my own belief, is to kind of have a plan going in. I like to keep a trading journal. It's just a little black notebook with white line pages. Actually, they're dotted pages, not lines, lots of little like graph dots. And I like to just write down, like, why am I doing this? What's my plan? And my plan here is to buy the shares of companies that are profitable, at least $1 billion market cap, and if I can get, like I said, 2 or 3 that do really, really well, I think those will more than make up for any mistakes, any of the stocks where I was kind of wrong in my judgment and my assessment, my math wasn't great, my intuition was a little bit off, or I just had bad luck. So I just try to take a look at the whole system. And you know, I was listening to an interview with Greg Maddux, amazing pitcher, Atlanta Braves. Even if you're not into baseball, this analogy will work. because they were asking him about hitters, you know, what did he think facing certain hitters? He said Barry Bonds was like the best hitter he ever faced. But he said he didn't get too focused on any one hitter. When he was preparing to pitch, he looked at the whole lineup, all 9 players he was going to face. And in some cases it's more than 9 because they got several players on the team. But he'd look at the lineup and he would figure out what he had to do with each player he faced. And I think that's useful because in a way, looking at the lineup of all 9 batters is like looking at your portfolio of stocks. Instead of focusing on any one stock, just like a pitcher focusing on one player he's going to face, you look at the whole thing, the whole portfolio, and you see, can I grow this whole portfolio? And you have to have a goal. I think the S&P 500 is a good one because it's big, it's easy, everybody sees it, and it's very cheap to own it at low cost through a ETF like VOO or the whole stock market through VTI, and then you can just benchmark yourself. And just being honest, like if you through your stock picks don't match the return of the S&P 500, then why are you doing this work? Because you could just take the time off and invest in the index fund. It's almost free and get a better return. But I think that if you're watching this, it's because you like the challenge or you believe that you have a better chance than most people at picking stocks that will outperform the index fund, the S&P or whatever your index is. Let me know. I'm interested to hear from you guys. What are your thoughts about how you pick stocks or why you pick stocks? That's a good question, I think. Why? We all know it's much harder than it looks to beat the market. Anybody who looks at their own portfolio, I know myself included, like looking at my semi-stock portfolio, I think the thing's down about 33% since I started a year ago. So if you're honest about that, I was like, oh, what was the mistake? Well, I think a mistake, if I really thought this was going to beat the market, was I should have been realistic. Semiconductors are just one industry. It's a very small industry within the larger tech sector, and it's a volatile industry. So if I really thought that over a one-year period I was going to beat the market, then I was delusional there, because I was ignoring the possible outcome that the industry I picked might be cyclical and it might be on its way down, which is exactly what happened with semiconductors. But I think we just need to be honest with ourselves about our goals. And just to shift gears a little, just to shift away from semis, this year I started a new approach. I'm not focused on semis. I've invested in 10 companies, and those of you who've watched this channel will know this. They're in different industries. In fact, only one of them is a semiconductor stock. The other 9 are all in different industries. And I've revealed a few of them, but I'm kind of revealing these one a month during the course of 2025. So far, I've revealed Vistra Energy, Vital Farms, Sterling Infrastructure, and Sprouts Farmers Markets. I think those are the only ones that I have revealed so far. And overall, my whole portfolio, I've been buying these stocks like dollar cost averaging into them every month. It's beating the market. It's actually a positive portfolio so far in 2025. And I will tell you, this compares pretty favorably to VOO. Let's see, VOO so far is sorry, this is taking longer than I expected. Year to date, negative 4.15. So I'm just slightly positive, beating the market by at least 4.15 because I'm positive. I haven't checked my return today. But yeah, to beat the S&P is my goal now. I think one of the reasons I'm doing a little bit better right now than I did with my semis is that it's more diversified. I have companies in everything, as you could see, from energy to eggs to infrastructure to retailing of, you know, healthy organic foods with Sprouts Farmers Market. So, you know, it's kind of spread out among different industries and sectors of the economy. And Also, I think I just have learned something over time. I'd hoped that I'd get better, but I do think that these companies I understand better than I did getting into the semiconductor industry. And so there you go. I will talk more about my growth stock portfolio as the year progresses, but I just wanted to shift over to that because I think it's good to focus not only on some of the mistakes that we make, and again, I don't think semis were a mistake, but I think that I had a more positive belief that the future was bright for all of these semiconductor related companies. And now I'm realizing that there's a lot more vulnerability in small companies in a very niche industry, and how if something changes with NVIDIA, for example, if they have questionable demand, then that just ripples through the whole supply chain. So a company that may make things for NVIDIA, for example, if they announce a change or they're going in a different direction, that can just ripple through the whole industry. So, you know, just realizing that, you can pull that forward and use that in the future decision making and go, oh, you know what? When I invest in a stock, I don't want it to be too dependent on any one customer or on any one technology, because if that gets affected, then what? So always kind of ask those questions. If this happens, then what? And I think that'll make you a better investor. These are the kinds of things I think about, and I hope that they are making things better for me, because why go through life at a disadvantage? I think being able to learn from mistakes is a great thing. Pull the mistakes forward and then use them to make better decisions in the future. So those are my thoughts for you today. Hope you liked sharing the time. I know I always like making these videos. The only thing better than making videos like this is hearing from you guys in the comment section. So please write below whatever you're thinking, whether it's about Axcelis Technologies or stock investing in general. I always love to hear from you. And of course, if you have not yet liked this video, I always forget to ask you guys to do this, but please just click that like button. Helps to keep this up there in the YouTube algorithm in the good graces. And if you're not yet a subscriber, I would love to have you on board. I talk about investing mostly in small company stocks, and I last year focused on the semi sector. This year, portfolio of 10. They're mainly small caps, a few mid caps mixed in, but this portfolio is doing well. And like I said, the S&P 500 may be negative 4 point whatever, but my portfolio is actually positive, and it's even outpacing the Tom Lee GRNY ETF. And I think anytime you're able to outperform somebody who is regularly on the TV talking about stocks, that's pretty darn good. So stay tuned for more. Thanks for watching. I will see you in the next video.